The risk of intervention has been there for quite some time. I think the undervaluation of the currency, the sort of price action we were seeing, are kind of the first two ticks in the stick, if you like. I still don't see a substantial disconnect with domestic policy. We've got expansionary fiscal policy on behalf of the government. And as we just saw from those quotes from the Bank of Japan, they don't seem particularly hawkish. They don't seem like they're in a hurry to hike. So I think the talk of intervention is cascading through markets. I think the prospect of actual intervention, at least in any sort of sustained way, is still quite low.
So, okay, intervention is low, but I took a look at some CFTC data and the hedgies, right? Since the start of the year 2026, they've gone basically short yen. So if there is central bank intervention, either solo by the Japanese together with the Fed or whatever, right? That money could flip pretty easily, and that would be a nice tailwind and help any sort of intervention, wouldn't it?
I completely agree. But even I think the real money side, I think this concern about the correlation between a weak yen and weak Japanese government bond markets has seen a lot of people talk about serious fiscal concerns feeding through Japanese asset prices. I think there's some more medium-term money which is quite wary of Japanese asset markets as well.
Do you think that folks are being a little bit too careful, cautious, or even scared about Japan's fiscal position deteriorating? Because we know Sanaa Takaichi and her big spending plans, that's been out there for months now already, right? But I think what a lot of people either forget or maybe tend to ignore is Japan is also the world's largest creditor nation, and it's the net position that we should be looking at.
Well, it is, except I guess different hands. You know, if I owe the bank $1 million, but my brother has $1 million in assets, I'm not sure as a family that we're always going to work it out. But I am concerned about fiscal positions in Japan, in France, in the UK, in the US. The evidence we have is, as these fiscal positions become a bigger concern for investors and markets, and let's use the example of the UK in 2022, is we don't get all of a sudden some aligned political agreement about dealing with the challenge. What we get is more discussion.
We get a trust moment in Japan?
We get more discussion and more argument and less agreement. In fact, it's difficult to justify Japan's current fiscal stance from an economic perspective. Inflation is already above target. The central bank's needing to hike rates, and yet you're adding fiscal stimulus into an economy when, even on a net basis, Japan's net public debt is 140% of GDP, the highest in the OECD.
All right, fair enough. Sherry, come in on this.
Yeah, Richard, it's great to see you on set. Thank you so much for coming in to talk to us. And I don't know if you got a chance to really look at the BOJ minutes as you were getting ready to go on air, but a couple of lines that stand out to me. That one member said underlying inflation, it will likely accelerate gradually. And then another member is basically saying the government stimulus, a fiscal stimulus package, will push up growth in the coming 1 to 2 years. How do you marry the two? And perhaps this is a very hawkish reading kind of BOJ minutes.
I think it is a hawkish reading. The Bank of Japan seems to be trying not to send signals that are too strong, using words like, not preordained in terms of thinking about rate hikes. But it seems unambiguous that the Japanese economy is operating above potential. Inflation is away from target, has been for a couple of years. No realistic signs the economy is going to weaken enough to come back to target. Further rate hikes seem almost certain, with only the timing in question and the way the Bank of Japan packages those hikes, if you like.